Hello, grads of FinLearn Academy and fellow traders. So, still our markets are stuck in the range. First, let us understand the structure part of the market. See, the channel high was not breached. Fine, it tried to reach the upper end of the channel, and the move was rejected from here. So that makes that the medium term market is in a corrective mode. So till we don't break above the channel, we can't rule out the possibility of index one more time testing the lows around these levels. So definitely the bias for the market continues to remain on a negative note. So the channel was not breached. See, either it should have breached the channel and this high and signaled an uptrend, but it not happened. So now we are likely to see market going down lower toward 16,000 to 15,800 levels. It may not happen in the next week, but that's the trajectory for the markets till we don't see further reversals. And notice one thing. See, when market rose up, there was a gap here. So in our M trade, we have a setting in which I can apply it, which is gap up, gap down. So this is Nifty. Clearly, it had a big gap over here, and this gap is not filled. So what does it indicate is that till we are not, one second, now let me remove it. So till we are not closing this gap, the bias will continue to remain a negative for the broad market. Just give me a minute here. I'll open my chart. Yeah, the gaps are gone. Fine. So gap signifies that's the level from where we saw fresh selling. Right. This gap was not closed. We saw a one-day rise which was rejected at this gap. And notice one thing, by plotting the 200-day moving average, we are whipsawing the average. Above the average, we are not seeing any strength. Right. This is the 200-day average. For the last 3 days of 1, 2, 3, 4, 5 days, we are trading around those averages. Right. So now we are once again seeing a pressure on the averages itself, which is the 200-day moving average. So once it breaks, possibly we don't have any credible support level all the way down till the most recent low. So we need to see how market is closing this gap on the upside for us to see even a short-term upswing, or this should be 17,500 should be your levels on the upside as far as the current market is concerned. And if you notice, we are developing also a neckline over here. It's too early to say, but because the pattern is getting developed. So once this base breaks, right, then further we should see some selling pressure emerging towards the last low. So one thing is clear that this market is not sustaining around or above the 200-day moving averages. It made one attempt to go past it, but the rise was rejected by this gap over here. And the trajectory once again on the short term, which is for the swing traders, the market is poised on the negative side with reversal levels around the most recent high. So that makes the bias for the markets negative. Now let us plot the Bollinger Band. See, market right now, you can label it as a volatile sideways. Fine. So I'll just plot my Bollinger Band and I'll assign white color to the band. Even on the Bollinger Band, we have some support around the lower end of the band, which has flattened around 16,800. So let's see whether this low holds or not, or we can see the band expanding on the downside because the bands are flat. Once you have a band which is flat, you can't see a range for a longer period of time. And in this pullback, market failed to cross the 20-day moving average or the middle Bollinger Band. So as long as we are staying below the middle band, which is the 20-day averages, the short-term trend for swing trader is considered down. So keep this level in watch. See, these two are immediate levels for traders, uh, which is this gap over here, 17,500 odd levels, and the lower Bollinger Band around 16,900. Right? So a flat band, like it was flat here, but it failed to cross. So band expanded on the downside. Can we see that? We cannot rule out a possibility. So you are trading a market which is into a downswing with a momentarily pullback. Here the pullback lasted for a day. Here it lasted for 2 days and the decline is continuing. On the same parameters, let's go and check Bank Nifty. See, Bank Nifty clearly failed at the 200-day and the 20-day moving average. Can you all see this over here? It did not even go to close this gap, which shows that relatively Bank Nifty is weaker than the markets. Till it's not going above the 200-day moving average, let's not anticipate any upside in Bank Nifty. Rather than we should see a decline towards 35,000 odd levels. And if it breaks over here, we don't have any credible support at the last low around 32,500. So the gap area for the Nifty and the 200-day moving average and the 20-day moving average both are have now converged at a price point. So this level is going to be very strong resistance for Bank Nifty. Any traders who are planning to go long should only go long once it crosses this high. Till that point of time, avoid bullish stance or positions on the markets. So going forward, markets are under a decline. The swing is down both for Nifty and the Bank Nifty, and both the indices are immediately heading for the lower Bollinger Band. At that point of time, let's see whether the band are expanding on the downside for the decline to continue towards the last low, or again we might go and consolidate around the lower Bollinger Band. So that's from the weekly update. We are into a downswing for both the indices. No strength was seen around the 200-day. Nifty made an attempt to go past above that once, but it failed, and Bank Nifty made no attempt to go past the 200-day moving average. So you know the downside, which is the lower Bollinger Bands, and below that the last low. Reversal on the upside is the middle band or 200-day moving average for Bank Nifty, which comes to around, if you want me to quantify, it comes to around 36,800. That's your reversal on the upside. And for Nifty, it will be the middle band or the 20-day average, which is at 17,455. So that's the weekly update. Going forward next week, we should see the downswing continuing towards the lower Bollinger Band.